Demo trading is for professionals who want to survive, not beginners. I know because I skipped it in 2013. 3 months later, I had lost $180 of my $200 starting capital. It wasn't just the money. It was the feeling of being completely out of control. In the 12 years since that disaster, I've analyzed thousands of trades, and the pattern is always the same. Traders who skip demo blow up accounts in live tuition for lessons that cost exactly zero on paper money. In this video, you'll get the simulation mandate, the 3-phase system that certifies that you are ready for live trading the same way pilots must certify before they ever fly real passengers. Phase 1, the mathematical passport, a single calculation that approves or bans you from risking real money. Phase 2, the platform mastery drill, a 30-minute routine to automate your trading execution. Phase 3, the discipline forge, a psychological firewall against revenge trading. Now, before you think 90 days on demo sounds like forever, here's the math. If you are currently losing 10% monthly, you will bleed $718 of a $1,000 trading account in the next year. Demo costs you zero. You are not delaying profit. You are avoiding a 2-year detour recovering from preventable mistakes. The shortcut of skipping demo trading is actually 100% longer and costs you thousands of dollars. I'll prove exactly how these 3 phases stop that bleed and certify that you are ready. This is your trading pilot's license. Now, let's start with the part most traders never do, proving you actually have an edge. Most traders operate blind. Every dollar you risk right now is a coin flip. You have zero proof that your trading approach actually has an edge. And this is why your account balance looks like a heart monitor. Up $150, down $200. You are not building wealth. You are gambling with extra steps. This is not just a feeling. Between 74% and 89% of retail investor accounts lose money. That is exactly what happens when you skip validation in your trading. The market does not care about your hope. It only respects mathematical edges proven over large samples. Most traders never validate their trading strategy. They take 2 or 3 lucky wins, feel like they've cracked the code, and immediately they scale up. For example, it's Thursday night, 11:47 p.m. You are scrolling through your broker app in bed. You've just hit 3 wins in a row on the Euro USD. You've made $347 in 2 weeks. Your internal voice starts whispering, "This is it. I finally figured this out. 3 wins in a row and not be luck. Maybe I should double my position size on the next trade. I'll be at $1,000 profit by next month." 2 weeks later, a normal losing streak wipes out that $347 plus another $215. Because 3 trades is not data. It is noise. Markets cycle. Flip a coin 100 times and you'll get 5 heads in a row eventually. That is simple probability, not a trading edge. The only way to know if you are skilled in trading or just lucky is sample size. The minimum is 30 trades, not 10, not 20. 30 is the statistical floor where you finally see the signal through the noise. You wouldn't trust a surgeon who had only performed like 5 operations. You'd want to know their success rate over hundreds. Trading is no different. The 30-trade chest is your surgical record. The fix is the mathematical passport, the system that ends the guessing game forever. This is not about fake profits. It's about collecting objective data. The goal is a single number, your profit factor. Here's the 8-step process to earn your passport. Step 1, trade your strategy on demo for exactly 30 trades minimum. Every single trade must follow your strategy rules perfectly. Step 2, log every trade immediately. the entry price, the exit price, win or loss in dollars, no rounding up, no omitting the ugly ones. Step 3, sum up all your winning trades to get your gross profit. Let's say 13 wins equals $600. Step 4, sum all your losing trades to get your gross loss. For example, 17 losses equals $350. Step 5, now do the calculation. Divide the gross profit by gross loss. $600 divided by $350 equals 1.71. Step 6, that number, 1.71, is your profit factor. Think of it as your trading license score. Step 7, if your profit factor is greater than 1.4, you are mathematically approved for live trading. You have a proven edge. Step 8, if your profit factor is less than 1.4, you are banned. You do not deposit money, you go back and you fix the trading system and retest. Why 1.4? Because this accounts for real-world friction, spreads, slippage, and those small trading execution errors. A 1.2 profit factor on demo usually crumbles under live conditions. 1.4 is your safety margin. So back to our example. Same Thursday night, 3 wins totaling $347. But now you've completed the mathematical passport. Your internal voice sounds different. Nice. 3 wins. That brings my 30 trade sample to 27 completed. Profit factor is sitting at 1.58. 3 more trades to finish certification. The strategy is working. These wins are just variance inside the proven system, not lucky guesses. The mathematical passport creates a psychological shift in your trading. You are no longer hoping. You are knowing. When you hit your first live losing streak, you won't panic. You know the calculation. Over 30 trades, the system prints a 1.6. This streak is just expected noise. But even with a proven edge, traders still blow up the live account because they fumble the execution. In August of 2013, I made the most expensive button click of my life. Month 1, I lost 55% of my initial $100. I deposited another $100 and then lost 60% of that. The brutal part, some of those losses were not because of a bad strategy. They were platform trading execution errors. I would click buy when I meant sell. I once entered 0.1 lots instead of 0.01, accidentally risking 10 times my intended amount. Pure luck saved me, but it terrified me. These were execution errors, the trading equivalent of a pilot hitting the wrong switch and putting the plane into a nosedive. Now, even traders with proven strategies who pass the mathematical passport blow up because they cannot execute under pressure. Your strategy might be perfect on paper, but if your hands don't know the button sequence by reflex, you will crash the moment fear floods in. For example, it's 2:47 a.m., you are lying in bed, staring at the ceiling, and you can't sleep. You open your trading app. Your GBP USD position is down $73. Your stop loss is set at minus $100. But watching it bleed in real time is unbearable. Maybe I should just close it now and save $27. Or wait, should I check if the trend is still valid? You switch to the chart. You start second-guessing your entry. Should you move the stop loss further away? Your heart starts pounding. In the chaos, you freeze. Or you panic close, locking in that $73 loss. The next morning you wake up to see the trade reversed exactly where you thought it would and would have hit your take profit. This is the cost of not drilling trading execution. When cortisol floods your system, your conscious thought shuts down. Your hands need to know the sequence by pure reflex. And without that, you fumble. The solution is panic-proof interface mastery. The goal here is to hardwire the execution system into your muscle memory through forced repetition, like a pilot drilling emergency procedures in a flight simulator. Here's the drill. Step 1. Set a timer for 30 minutes. Open your demo account. Step 2. Execute this 7-part button sequence 10 times consecutively. Part 1. Scan the trend. Spend 5 seconds, point and say uptrend or downtrend. Part 2. Identify the level. 10 seconds, point and say support at 1.2650. Part 3. Spot the signal. 15 seconds, say like pin bar rejecting the support. Part 4. Calculate 1% risk. 10 seconds, say 1% risk equals $10. Part 5. Calculate the lot size. 20 seconds, say for example, stop loss is 25 pips. Calculation says 0.04 lots. Part 6. Place the pending order, the stop loss, and the target. 30 seconds, say order placed, stop at 1.2625. Part 7. Close the platform immediately, like in 5 seconds. Do not watch it. Step 3. If you fumble at any point, if you hesitate, forget a step, or click the wrong button, you must restart from 0. The goal is 10 flawless repetitions in a row. Step 4. Repeat this weekly until the sequence is automatic. Most traders need 4 to 6 weeks. But why does this work? The verbal narration creates dual encoding in your brain. That is motor memory plus auditory memory. When panic hits, one of those pathways stays active when the other fails. Same 2:47 a.m., position down $73, but now you've drilled the sequence 50 times. Your internal voice sounds different. Position is down $73. Stop loss is at $100. That is where my analysis said this trade is invalidated. The stop loss is already placed. The trade is managed. My only job right now is to close the app and go back to sleep. My trading system handles the rest. Your hands reach for the close up button because that is exactly what you have drilled. After implementing this back in 2014, my trading execution error rate dropped to near 0. No more wrong buttons, no more miscalculated lot sizes. Demo trading is where you build those reflexes without the financial penalty. Now, mastering the buttons is critical, but it's only one piece of the puzzle. Most traders have a different blind spot entirely, one that sabotages them even with flawless execution. I built a free 3-minute quiz that pinpoints your specific trading blind spots and reveals why you are still bleeding cash. It gives you the clarity to understand why your specific flaw keeps destroying your trades. Click the link in the description to discover your personal diagnosis. You know the rule. You even wrote it down. It is right there on a sticky note. Never move my stop loss. And yet, 2 hours later, you are staring at the chart, price creeps towards your stop loss, and your hand hovers over the mouse. Maybe I just set the stop loss too tight this time. You click modify. You widen the stop. 30 minutes later, that widened stop loss is hit. You lost twice as much as you planned. This is trading discipline failure. It is the #1 killer of trading accounts. Here is what makes this so devastating. Real money activates the amygdala, your fear and greed brain. It literally overrides your rational thought. On demo, there is no emotional hijack. But with real savings on the line, the amygdala lights up and the rational part of your brain gets silenced. This is what happens to a trader who consistently disregards these rules. First trade, stop loss hit. Second trade, stop loss hit. Third trade, stop loss hit. And here's where it falls apart. He can't sit with the discomfort. 3 losses. I need to make this back now. Fourth trade, FOMO. Stop loss hit. Fifth trade, revenge trade. Stop loss hit. By the end of the week, he burns through 10% of his account. The trading strategy was not broken. His trading discipline was. This is where the discipline forge comes in. The goal is not more willpower. It is behavioral conditioning in your trading. Here's the 9-step rule set. Step 1. After every demo loss, close the trade immediately. Do not stare at the chart. Step 2. Write the loss on a physical paper. Loss minus 1R on GBP/USD. The physical act creates a much stronger imprint than a digital log because it engages your motor cortex against the emotional memory. Step 3. Place that paper in a folder labeled buried. Ritualize the death of the trade. It is gone. Step 4. Close the trading platform completely. Step 5. Do not open the platform again for 24 hours. This is the quarantine rule. It breaks the impulsive reaction loop that destroys your trading discipline. Step 6. For every trade, log your execution score. Did I follow my plan perfectly? Yes or no? Step 7. Track your execution percentage over 30 trades. Step 8. You are certified for live trading only when your execution score reaches 90%. That is, executing 27 out of 30 trades with perfect adherence. Step 9. Profit and loss are irrelevant during this certification period. Only your execution matters. Why does this work? A trader with perfect discipline and a mediocre strategy will always outlast a trader with a great strategy and no trading discipline. The math does not care about your edge if you cannot execute it consistently. When I finished my demo phase in 2015, I didn't become a millionaire overnight, but I stopped blowing up accounts. That was the real certification. Now you have the simulation mandate, but 90% of traders still blow up even after passing the certification because they validate the wrong things. This next video reveals the 3 hidden failure points in the 30 trade test that blows up accounts. The mistakes your certification needs to catch before you ever risk real money. So see you in that video.